Hello. Now in this section we are going to discuss about the second part of the understanding the financial statements or the annual reports or the company's performance is going to be the second section about the risk factors. So in the previous video we learned already about the company's business, where the products and services. Now let's understand what are the risk factors the company identify for themselves, right? There are general market related risks that are there, but the company also try to identify certain risks that are unique to them, right? So this in this company, the Apple has say that okay, their business and financial stock prices has already been affected by the COVID, by the due to future of materially adverse affected by the COVID-19 pandemic, which is there, and then you can read about it in more details, but the more important point is already being made. Then you have the global and regional economic conditions could materially impact. So the company will not say how much it has impacted or what are the impacts actually, but the company is trying to make the users aware that what kind of risk exists for the company. So since those risks are there, they are telling the user that you should not try to use the historical data to predict the future performance, because they are they are general economic impact on the company's performance, because and the result of operations, because the general macroeconomic things affect every company equally, right? Then there are certain things that are specific to the company, means the global markets, and they are highly competitive, subject to rapid technological changes, and maybe company may not be able to adversely affect those peoples. But however, the company will also try to say that what they are doing. So they are doing trying to do compete successfully by doing the R&D, by holding the significant number of patents, trademarks and copyrights which has been registered and applied to the register numerous patents. But in this competitors, they may primarily be on the aggressive pricing and copying or trying to infringe the copyrights of the company. So and you can also see the company has a minority stake, minority interest, minority market share in the global smartphone, and substantial competition from the company that have significant technology, market and distribution resources. However, they try to be on edge by the innovation. The company face significant challenges from the company to imitate the company's products. Then they also face substantial competition from the company that have significant resources. Then they have the financial condition. Then the companies then they are saying that company depend on the performance of carrier, wholesaler, retailer. Now you can try to remember the earlier discussion where the company said, the Apple said that it's 66% of the business is coming from indirect channels, like indirect distribution channels, means the 2/3 part of the business is coming from the performance of the carriers, wholesalers, retailers and other resellers, because if they are able to sell well, the Apple will be able to sell well. If they are not able to sell well, they will not be able to sell very well. So the existence of those indirect distribution channels is critical to the company's success. Then the company has also exposed the risk of write downs, value of inventory. Why the company is saying that? Because the company is changing its products and services, and quite often. So whenever they launch a new brand, if the inventory, if there's a high inventory lying in the market which remains unsold and the new product is launched, then the existing inventory which is lying unsold may get a significant lower value, because all the prices of the older brands are always reduced when the new brand is launched. So there may be significant write downs on the inventory. So that's again a risk that the company has. So the company will be telling you all the risk which the company can foresee in their operations, so that they can understand. and the company depends on the component and product manufacturing, logistics services by outside partners. The company provides may be affected from time to time by the design and manufacturing defects that could materially impact the business. And also the future performance depend on the part of support from the third party software developers. So rely on the access to third party intellectual property which may not be available to company on a commercially reasonable terms or at all. So there are things that are the third party softwares which are available on the iOS platform. They may not be available, which may impact their ability to sell the iOS in the future. If there's no software, nobody gonna buy the iOS, right? So that's the risk the company has. And is also subject to changing laws and regulations, which is pretty standard and normal to every company. So you have to just only make sure the company specific risks, what are those company specific risks, and usually what the company is doing about it. The company normally is saying what they are saying about the company. So the risk is quite a huge risk, so you can read it at your leisure and understand it. We are not going to spend our time here too much, but we will understand it, right? Then the second item is unresolved stock comments. There is nothing. Properties, then the company will be telling where are the headquarters lying, and then what they own and what they not own, the lease facilities. They have data centers, they have retail and other purposes locations throughout the US and in other places outside the US. And they also believe that is used by the reported segment are in good operating conditions and suitable for the conduct of the business. So they are not giving too much details of the products, but they are just telling where they are usually, and they are certifying that is available for use. Now the legal proceedings they have put into the note 10 to the consolidated financial statements. That's a very important aspect that you have to read. So we can either straight away go to the note 10 and on the commitment and contingencies and try to understand what are the legal proceedings against the company, or you can do it while you are reading the annual financial statements, since these will not really impact the annual reports, the data. So you can go direct. So where the note 10 is, you can go down and try to search note number 10, note number 4, note number 7, 8, 9, and then you have 10, commitments and contingency. So here you can see what kind of liabilities are pending. So here this table is drawing the accrued warranties in 2018, 19, 20, because there is a 1 year or 2 year warranty with each device that they are providing. So there is always a claim. So here you can see the original was 3,570. Then there is a cost of warranty claim as well. The company has actual settled claims, the cost of settling the claims from the warranty about 2,900. The new accruals are 2,700, which are new sold. So the ending accrual and liabilities are $3.5 billion. $3.5 billion worth of warranties are still pending with the company. But since it's a stagnant amount, is not changing quite a lot, so it's nothing to worry about. Then you have the here you have company offers an upgrade plan which is available to the customer who purchase a qualifying phone in US, UK, China, mainland, and the upgrade program right to trade in the specified amount when purchasing a new phone, provided certain conditions are met. The company accounts for trade-in right as a guarantee liability and recognize the arrangement revenue net of the fair value of each, right, and with the subsequent changes in the guarantee liability recognized within the net sales. So here trying to understand the company's accounting practices. So what they are basically saying is whenever the company has a trade-in, so the trade-in right as a guarantee liability and recognize the arrangement revenue net of the fair value of such right, means whenever there is a trade-in, the company will not recognize that much of right as a as a as a revenue. They will be recognizing only the net part of it, and the rest part will come into the guarantee liabilities, will be offset from the guarantee liabilities, which is okay, can be answered, can be considered. Then the unrecognized the arrangement and subsequent changes to the guarantee liability recognized within the net sales. Then the concentration in the available sources of supply and material. So here again you have the contingency. So what kind of components are lying? So you can see, try to understand. The company competes with various company use custom components. It does not say which specific component they are having a significant, but they are just saying some of the components are concentrated, which is fair. They are not going to give the information about the company in that details, but you may have to research it by yourself on the web, what kind of components are made where. That kind of information is usually available in on the internet search. Then you have unconditional purchase obligations. So you have entered into off balance sheet commitment that require future purchase of goods and services. Unconditional purchase, the company's unconditional purchase obligation primarily consists of payment for supplier arrangements, internet and telecommunication services, intellectual property licenses. The future payments is total about $8.6 billion, which will be coming in 2021, 22, 23. So usually when you are doing a fair value of the company, you may have to use this amount to reduce from the future cash flows, so that you are not overvaluing the cash flows. That's a very important aspect to remember. Then you have contingencies. So there are details of lawsuit which is happening. So there are Vimet X company has against the company alleging certain of the company's products infringing the patents owned by Vimet X. Jury has already returned the verdict against the company and awarded damage of $500 million. The company appealed to the Court of Appeal, which remanded the case back to the US District Court, which is scheduled for a retrial in October 20. The company has challenged validity of patents, and the PTO has declared the patents invalid. So means that the company the company has the chances to win the result of this lawsuit. So that's why maybe the company has not provided the amount of $500 million in damages to their profit and loss statement. If the Court of Appeal has also rejected the contention by Apple, they have to provide the $503 million into damages as an expense, right? So instead of putting as a contingent liability, this is contingent only because it depends on the court ruling, and the chances of losing or winning are 50-50. So you cannot say that there is no liability at all. There may be a liability if the company loses it. Then you have performance management issue. Then you have French competition authority, which has also slapped a competition law fine of $1.1 billion. They disagree and have appealed. So there is information about the company's lawsuits, which is very important for users to understand what are the potential damages. So when you are evaluating the company's performance in the future, usually you analyze the information based on the past performance to understand how the company would be, try and understand how the company has done and what are the future prospects. The future prospects, you will need to have this information in your hand so that you can understand in the future what is coming in the way of company, right? That's very important. So here is again a verdict of $500 million. So there is a $500 million by Optes, by Vimet, and also by French Competition Authority. So there is total of $2 billion. The iOS again is another $500 million. The company has agreed to pay $500 million to the owners of smartphone if certain conditions are met. The final amount of settlement will be determined based on number of consumers who file valid claims. So it means that the company has not yet settled it, but there is a amount to settle if there are claims. So there's a potential liability on the company. Since this is shown as a contingent liability, it means it is not a part of your financial statements yet. So whatever is the profit of the company, it has to be reduced by another $310 million. So that's about the contingent liability. So we were at the risks. So we gonna go back to those risks again, so that we can understand what are the next steps, right? So the next step, we have now understood the first step already, the company's the legal performance. The next step is to search about the company's news in the which may not be here. So that's what we're gonna be learning in the next video.